When we talk about the housing market, we always hear about interest rates, we hear about inventory, but today we're diving into something else, something that's arguably way more powerful. A huge shift in the US job market that's completely changing who can and who can't buy a home. So let's just cut right to the chase. What's the one thing you really need to get? It's this. Those high-income jobs, the ones that have always fueled the home buying frenzy, well, they're disappearing. And that's putting a serious chill on the housing market. This single trend, believe it or not, explains almost everything about where things are headed.
All right, so first, let's pull back and look at the big national picture. Before we get into specific cities, we've got to understand the massive trend that's affecting the entire country.
The engine of the US labor market is, well, it's kind of sputtering right now. And look, this isn't just a small dip. In most major cities, job growth has slowed to an absolute crawl, hitting a pace we honestly haven't seen in more than 10 years.
But here's the thing, that headline number, it doesn't even begin to tell the whole story. The real issue isn't just how many jobs are being created, it's the kind of jobs. And that's where we're seeing this massive split open up in the economy.
This slide lays it out perfectly. It's a tale of two job markets, really. On one side, you've got your high-income jobs. We're talking tech, finance, professional services. These are the careers that create homebuyers. And right now, they're actually shrinking. But on the other side, you've got education and healthcare. These jobs typically create renters, and that whole sector is absolutely booming. And wow, this chart just says it all, doesn't it? Take a look. Year-over-year growth for high-income jobs is totally flat, 0%. That's way, way below its long-term average of 1.6%. Meanwhile, education and healthcare jobs, they're up 3.3%, just soaring past their normal pace. This isn't a small gap, folks. It's a chasm. And this quote right here, it gets to the absolute heart of the matter. We just can't judge a city's housing market based on its overall job growth anymore. If you want to know what's really going on, you have to dig deeper and ask, what kind of jobs are they creating? The mix of jobs is now the whole ballgame. Okay, so that's the national trend. But how does this look on the ground, in real places? Let's zoom in on 4 really different cities to see how this economic story is playing out. This table gives us such a powerful snapshot of just how different things are from city to city. You've got Charlotte still growing strong, but then you look at former hotspots like Austin and Denver. I mean, they're growing at a tiny fraction of their old pace. And the Bay Area, it's actually in the red, losing jobs. This sets the stage perfectly for what's happening in their housing markets. First up, Charlotte. It's really the rare bright spot here. With 2.6% growth year over year, it's one of the only places where those professional services jobs are still expanding fast enough to keep the for-sale housing market humming along. Now let's pivot to a couple of former superstores, Austin and Denver. I mean, not that long ago, these were the hottest markets in the entire country. But now, job growth has pretty much hit a wall, falling way short of their usual powerful trend. The slowdown in high-paying tech and professional jobs is hitting them hard, and it's weakening demand for both buying and renting. And then you have the Bay Area, which is this fascinating paradox. We hear all this buzz about the insane wealth being created by the AI boom, right? But here's the crazy part. That boom isn't really creating jobs. In fact, the high-income sectors are still shrinking, leading to a small but real decline in overall employment. So what does this all mean in the real world? What are the actual consequences? Because this isn't just some abstract economic trend. It's creating massive ripple effects across major industries that, one way or another, are going to impact all of us. This whole shift in demand is forcing a huge adjustment for 3 key industries. Let's take a look at how home builders, rental operators, and even building product suppliers are having to adapt to this brand new economic reality. For home builders, the message is loud and clear. That pool of high-income buyers who can afford brand new homes, it's getting smaller. The bottom line is they have to pivot. Success from here on out is going to mean focusing on more affordable price points and maybe even rethinking where they decide to build in the first place. But on the flip side, if you're a rental operator, this is a huge opportunity. The fastest growing job sectors, education and healthcare, are basically churning out a steady stream of new renters. This all points to strong, sustained demand for rental housing for the foreseeable future. And of course, all of this trickles down. Companies that make building products are about to feel the squeeze. See, with builders laser-focused on affordability, the demand is going to shift towards smaller, more cost-efficient home designs, and that's going to put a lot of pressure on suppliers' profit margins. So after looking at all this, what's the big picture? What does the road ahead look like? I think it's about recognizing that the very foundation of housing demand is changing, right here, right now.
At the end of the day, the connection is crystal clear. As those high-income jobs start to fade away, so does the demand for for-sale housing. And this isn't some temporary blip. It feels like a deep structural shift that could reshape our economic landscape for years.
And that leaves us with a really profound question. For generations, right, homeownership has been this cornerstone of the American dream. But if the very jobs that make that dream possible are fundamentally changing, does the dream itself need to change too? It really makes you wonder what the future of housing is going to look like in this new era.